With regards to the overall trend on the equity market front, and as I mentioned, we were coming under slight pressure for the most part of the week. We've seen very interesting movements actually coming through. We had the rate announcement as well, rates unchanged, sitting at 12%. There's quite a bit of activity that is occurring. What has really impacted the equity market?
Okay, what has happened of late is that since federal allocations came in, we also had personnel costs coming too, and so all of it totaling over 300 billion naira, and then we saw a spike in prices on bond desk, marginally 10-20 kobo movements, but we've seen a lot of activity on treasury bills also. We've seen a lot of issuance of CBN OMO T-bills in order to mop up this liquidity as described earlier. The objective is to ensure that the inflation does not go up from the drop it's attained from 10.5 to 10.3. Basically, what's happening is that since MPR has not been increased from 12%, I mean, since the last maintenance, OMO will continue to be the instrument they'll use to mop up liquidity. And then we expect that this will extend into next week. We've had 3 days of consecutive OMO sales of bills in the market.
With regards to that open market operation that is occurring, we're starting to see it being used quite extensively over the past few weeks. Do you expect this trend is going to continue going forward?
Come again, please.
With regards to, as you mentioned, the open market operations that are occurring, it has been occurring quite extensively over the last few weeks. Do you think that this strength in the trend that we've seen is going to continue? Can you hear me, Bankole?
No, I can. Come again, please.
Okay, let's just try once more. Let's just touch on the excess liquidity that is coming into the market. Do you think that it's going to continue going forward?
Yes. The objective really with the OMO issuance is to mop up these funds, and by the end of next week, we would have less than 100 billion in the system. As at close of yesterday, we had over 214 billion. We do not expect more of our allocations coming in right now, but we saw also a lot of oil companies sell dollars for month-end clearance of their obligations. So this itself has taken out a lot of naira in the system. Liquidity will definitely reduce in the system, and you see people selling fine to take profit. Yeah. And to create some more liquidity for trade. That's placement in the money market, basically.
With regards to the FX markets, and we've been alluding to this the whole week, 150 to 160 is, of course, the target. We've seen the Naira trading above 161. Do you think that we're going to be tightly fitted in that band going forward?
Yes, in the last few weeks, we've seen a marginal reduction in pressure on the Naira. In fact, as at last Friday, dollar to naira and the interbank was about 161.30, and today it touched 160.20, a drop of 1 naira actually. That we can ascribe to the sale of oil company funds. NNPC did sold an amount that was undisclosed. We think these amounts were very huge. Of course, that was for month-end purpose. With going into the month, we may see pressure come back on the naira, but it will continue to range probably between 160 and 162 for now, except if government changes, or if there are major changes on part of federal government.
Bankole, you were talking about the yields with regards to the secondary market. What kind of yields are you expecting going forward, of course, as the new auctions come online?
Okay, with the continued issuance of OMO bills, we'll see a lot more concentration on T-bills, basically, because on the short term you can get out when it matures and then go into the new issues. Because today there was a particular T-bill that was issued of 9 months maturity, maturing in October. It stopped at 17 half levels, which is very, very high. And if major players in this sector see that the yields continue to grow, of course, they'll do lesser activities on the FX market. And then even on bonds, we've seen a lot of our customers ask more of T-bills. So we see a lot more of activity and increase in yield on the T-bill sector, basically.